Okay, good morning, good afternoon, everyone. Thank you so much for joining us today. I think we are at 3:02, so time for us to get started. We really appreciate everybody joining us. A quick introduction from myself. I'm Jehanzeb. I'm the founder and CEO of 𝗙𝗃𝗄, as well as the founder and CEO of 𝗕𝗿𝗄𝗯 & Partners, which is a consulting company. We have an excellent panel here today and made up of industry practitioners, consultants, ex-regulators, fintech association chairman, and generally people who are in the know of what's happening in the tech arena, definitely in the region and particularly in the wider fintech scene around the world. So we're very happy to have all of you here. The presentation in the beginning will be about 10-15 minutes, which I will deliver, talking about some of the key challenges that fintechs and Web3 firms face at the start of when they're building the products, at the time when they're trying to seek a license, and then when they are licensed, or some of the considerations that they have to go through. And then we will have a Q&A session with the panelists, which we will have. And then the most important part of the webinar is we will open it up for your questions. So please, if you have any questions, and we would want to make this as meaningful and as valuable for you, so please ask as direct questions as you can. We will ask very direct questions ourselves to the panelists, and then we can basically hopefully create value for you to spending your valuable time with us. So without further ado, I will pass it on for a quick introduction from our panelists. Maybe we can start with Bryan, and then move on to Mo, and then to Namir. So Bryan, over to you.
Thanks, Jehanzeb, and it's great to join you, Namir, and Mo here this morning. A group of great friends on this panel, and looking forward to the discussion. I think most people probably know who I am, but my name is Bryan Steyerwalt, and for this audience is probably the most important. I guess I was the former chief executive, or am the former chief executive of the Dubai Financial Services Authority. So been in Dubai since 2008. Most of the time with the DFSA, short stint in the consulting arena. But happy to join the panel and looking forward to the discussion and the questions.
Thank you, Bryan. Mo?
Yep, thanks, Jehanzeb. Hi, everyone. My name is Mo Yusuf. I am the CEO and co-founder at 𝗙𝗲𝗵. 𝗙𝗲𝗵 is a fully regulated digital asset platform. We enable banks, fintechs, and traditional businesses to launch regulated crypto and virtual assets products. I am also the co-chair of the Digital Assets Working Group in the MENA Fintech Association, where we work collaboratively with regulators and the ecosystem broadly to basically help to push the digital assets and virtual assets industry forward. Very, very happy to be here, and looking forward to the conversation. Thank you, Jehanzeb.
Thank you, Mo. Namir, over to you.
Thank you, Jehanzeb, for having me, and the 𝗕𝗿𝗄𝗯 and 𝗙𝗃𝗄 team. Lovely to be with Bryan and Mo. Everyone, this is Namir Khan with you. I'm the founder and chairman of the MENA Fintech Association, which has been operating since 2018 successfully. Amongst the top 4 fintech bodies globally, working on different agendas from digital assets to policy, payments, and the wider fintech ecosystem. The second hat that I wear is that I'm the founder and CEO of a sustainability-focused fintech, which is 𝗙𝗲𝗵, which is establishing the rails for carbon markets. And academically, I'm on the board of a university called Edinburgh Business School. Thank you.
Thank you, Namir. I'm delighted that all of you have taken time out of your busy days to join me today and join the participants. As I mentioned, I think this is going to be an interesting discussion, some very pointy questions that we want to ask you, and I'm hoping that the participants will also ask very direct and open questions, and we'll try to answer those as well. So quickly, I want to start with my presentation and lay the background of our discussion further. Managing compliance in the new age. Obviously, the world has shifted quite a bit post the financial crisis, and particularly post the advent of digital currencies, cryptocurrencies, and fintech and DeFi, and so on. And obviously, with those innovations come new challenges, both for the regulators and for the industry itself. The industry is very fast moving. The regulators, with all due respect to them, obviously by default lag a little behind, and that creates a bit of a tension. So the idea of the presentation today is to simply give participants on the panel an understanding of a perspective from three different angles, right? The first angle is an angle from a participating fintech or a Web3 firm. The second angle is from a point of view of a regulator. And the third point of view is from a point of view of a consultant, in a way to just give perspective to different things, how everybody is viewing the different stages of what you will need to go through. As I mentioned, at the build-out phase, then at the licensing phase, and then at the post-licensing phase. So hopefully you'll find this useful, and then we can take your questions. Okay, so I've mentioned that already. The presentation is just 3 slides. Before you build a product, what are the considerations you have to think about? That's a very important one. Sometimes there are challenges where the full regulatory aspects are not considered prior to building the product, which can lead to challenges. So we'll talk about a little bit about that. Second one is when you apply for a regulatory license, what considerations you have to have, and how you go about that process, because that process can cost a lot of time and money, and create potential issues in the commercial business model. So we'll hopefully give you some ideas to take away. And then the third part is when you start conducting regulated activities, what do you have to think about? How do you need to conduct yourself from a regulatory standpoint so that the commercial objectives that you are after are achieved with the least amount of irritation in the system? So that is basically what our goals are for this presentation today. Okay, so before you build the product, obviously the first part is how do you get your customers, and how are you going to manage those customers? If you have individual customers, if you have corporate customers, how you're going to go about that. Generally, in the beginning, the questions that we have seen in our example, and we'll talk to the panelists afterwards as well, is that how do I do KYC? How do I do KYB? Know your customer, know your business requirements. How do I implement them? Do I use a third party? Do I build my own system? Sometimes fintechs start building their own systems. Sometimes they want to white label. Sometimes they want to create a mixture of parts of the process they build themselves, and sometimes they basically completely build the whole thing themselves. So obviously there are benefits of and issues with each approach. If you want to build out yourself, it's going to cost you some time and some money, as well as potential issues that you may not be aware of, that other systems that are established have already sorted out. One of the key things that you need to really think about is what is the regulator interested in, right? So there are 2 parts of the onboarding process. One is your commercial onboarding process, which for fintechs and Web3 firms, you want to onboard customers as quickly as possible. But the other part is the regulatory process, right? Which is, if you want to be a regulated business, can create a slowdown in your customer onboarding journey, because you're asking for more information, you're asking for certain validations, and so on and so forth. So it is very, very important when you are starting the business, when you're building the product, to really map out the journey. I have seen very few fintechs that actually have properly mapped out the journey in terms of what the customer will go through in the onboarding phase. And obviously you cannot solve for all of the issues, but you should solve for the main ones in the beginning. So the main challenge there is, and there are lots of companies that are providing those solutions for you to implement if you want to use a third party or a white label solution. That's one part. So if you are onboarding clients, how fast you can onboard them. Obviously, this is a digital business. Fintechs typically want to do that. That has a huge impact on your ability to grow. If you just think about it, if it takes you 2 days instead of 2 minutes, obviously you'll have impact on the revenue, right? You're pushing the revenue out by 2 days instead of 2 minutes, and so on and so forth. So very, very important to map these things out. Second part, especially when you're regulated, especially when you're moving money around, from any business that's moving crypto around or moving money around, potentially you will need to deploy a transaction monitoring system. You have a traditional transaction monitoring system, or you have a know your token and crypto transaction monitoring system as well. There are different parts of it. We can talk about those with the panelists in the questions. Again, this is a very important part. Initially, what we have seen, most of the fintechs start with a manual process and then work towards an automated process because the volumes are not as significant. The regulators also sometimes allow that, more in the traditional fintech space, not in so much in the virtual asset space. But if you have a virtual assets business, then regulators like WARA would expect that you have a proper transaction monitoring system. If you have a crypto exchange, or if you have a broker dealer that has high volumes, then also even the traditional regulators would potentially expect that you have a transaction monitoring system. The transaction monitoring system can be an AML transaction monitoring system, or can be a fraud monitoring system as well. So you have to think about what are the different things you have to comply with. Again, the most important part is to map out what you need to do at the start and make conscious decisions of how you're going to go about solving those problems. Whether that is a position that, okay, we want to do it manually, we don't want to do it, but that's a conscious decision, and we will only do it if the regulator asks us to do it. Those are all fine, depending on your risk appetite. But the most important thing is that you make those decisions consciously, as opposed to those decisions being made for you by an external party, be it the regulator or potential fraud issues or AML issues, and so on and so forth. The last part on this slide is ongoing compliance management. Now, this is an ongoing challenge for pretty much all of the fintechs, especially if you are a trans-jurisdictional or cross-jurisdictional business with 4 or 5 or 6 different regulators. Each regulator has their own requirements. How do you track all those requirements? How do you track all your policies and procedures? How do you track compliance? How do you report on those? How does the management view all the risks that are coming in? So it's very, very important, again, to identify these. Now, this is all going to cost you time and money, but if you do this correctly at the front end, then you will have a lot more success as you build your business and grow your business. And again, if you are a high value, low volume transaction business, then you can start with a manual process. But obviously, in this day and age, if you have a manual process, it is likely to give you problems later on as you scale. And typically what happens is when you're deploying technology, particularly in the compliance space, as you are moving along, it's like driving a car and then trying to change a tire while you're driving the car, because you have to figure out, clean your data, implement a solution, connect APIs, and so on and so forth. So very, very important to think through at the beginning what you are going to do, who are the regulators, what are their priorities, what are your priorities, and where do you fit within your risk appetite, right? So there can be decisions to do everything manually, even if you're a fintech business, although it's unlikely, but it has to be a conscious decision, and so on. So those are the 3 points before you build the product you have to think about. I'll move on to the next slide. Okay, so this is an important part, and then we have done in our consulting business hundreds and hundreds of license applications, a number of them with fintechs. These 3 points are a recurring theme across all of our discussions with our clients. What to expect from the process. you should always expect that it will be more complex than you expect it to be, because the more complicated your use cases are, the more regulatory questions you are going to get. If you have different businesses, if you have different regulators, I can give you an example. If you are operating in the UAE alone and you're operating a virtual asset business, who do you go to? Number one, do you get a VARA license? Do you go to ADGM? Do you go to the central bank? If you have a business in Saudi Arabia, what do you do there? Can you do business in Saudi from the UAE, et cetera, et cetera. Secondly, it always takes longer than what you expect. So you should have your commercial model built on your base case, your worst case, and the average case. The base case generally is your more optimistic version. Typically, and most of the times, it will cost you more, both in terms of financial sort of expenditure as well as cost. So for firms that are looking to build this, it's very, very important to anticipate this. Obviously, I understand that fintech businesses and Web3 businesses focus on being efficient and fast. But there's certain elements in the regulatory process that you can only be so efficient and so fast. And the regulators are coming through on that as well. And we will talk to Bryan about that later on. What do regulators look for? Again, very, very important. We have seen a number of clients with very clear business models. They know exactly what they want. And we have seen a number of business models where there's no clarity of what is required. And if you go to a regulator with a confused business plan, you will end up creating more questions and more problems for yourselves as opposed to solving them. The idea is typically for you to have your 2 or 3 or 4 top use cases that will give you 70 to 90% of your revenue articulated in your business plan, so the regulator understands and you can explain how you're going to do that. This also has an impact on your expenses, because the more use cases you have, the more likely you will have regulatory obligations, which will end up resulting in you spending more money on compliance and so on. Product demonstrations, we have the days of I'm going to create a Figma screen and show it to the regulator and not having a working product. Those days are gone. Regulators are asking for a proper demo, a proper journey that you have to go through, from client onboarding all the way to reconciliation of client accounts, reporting, et cetera, et cetera. So if you're a Web3 business, if you're a fintech business, you have to be ready for that. If you don't have a technology ready, expect the regulator to spend more time with you and ask you to come back when your technology is ready. The third point here is a well-structured compliance plan. The regulators, whenever, I think this is also a bit of a misconception that whenever you are talking about taking anybody's money, particularly money from retail customers, that is a high-risk business for a regulator, because the regulator wants to protect the jurisdiction in which it regulates the financial services businesses. They are interested in understanding, and I mean the regulator is interested in understanding how you would comply with their requirements, which are aimed at protecting the consumers and generally protecting the financial services sector as a whole. So if you cannot articulate correctly what your compliance obligations are, and how you would meet those compliance obligations, either through technology or through a manual process or through a combination of those two, you will have challenges and it will delay the process. We know for a fact that a number of applications with different regulators are stuck because there's no clear articulation of what the use cases were. That's one. Number two, how the compliance obligations will be met. And these can be both in terms of the actual operational aspects and the resourcing parts. So for example, if you go to the regulator, and when Bryan was at the DFSA, we went to them and said, look, we only have 2 people, and we want to make the CEO also the compliance officer and finance officer, also the risk manager. Can you give us a license? The most likely answer will be no, because of various issues around combining those roles and so on and so forth. So, and then the most important part the regulators look for is their comfort level with you, that you understand that you can comply with the regulations and have the resources do so. That's why regulators also create fintech labs, sandboxes, right? So if you are really new and you have limited resources, you can always go to the sandbox and start there, as opposed to going and asking for a full license, which have a number of requirements attached to it. And sandboxes allow you to operate within a limited scope business. The last part, balancing automation and accountability, that's also very important. We have seen a number of issues with fintech, Web2, Web3 firms, where just because we have a system in place, we almost are absolved of our responsibility. And if the system doesn't work or it throws out incorrect information, then it's the system's fault, not our fault. That doesn't work also with the regulators. Ultimately, especially in the DFSA or the ADGM, or even with BARA or the UK, or generally any regulator who has a principles-based view, the management team and the board of directors are responsible for the operations of the entity. So, which effectively means that if the system doesn't work, you are responsible, right? You cannot point your finger at the system saying the vendor sold me the system and it doesn't work and they said it's going to work and so on. It is your responsibility to make sure that the vendor is meeting their obligations. And those are the key elements that you have to consider. So I think I have spoken quite a bit on these three topics. Maybe what we can do here is go to the panelists and start with our questions if the panelists are ready for that. Okay. So I'm going to skip that part because I've been talking about quite a bit. So I think we come back to it at the end. But I want to ask, I'll start with all of you, actually. The basic question, what is the key lesson that you would say from your own experience? The main, if you have to give one key takeaway for the fintechs, and let's start with the first part, right? Before they're starting or they're about to get a license, what key takeaway you would say that you have seen you will give them that will save them a lot of time, money, and hassle? Mo, maybe you can, or Bryan, you can start.
Yeah, I can. Bryan, go ahead.
Well, I'll be quick on this because this comes from a lot of experience, I guess. But there are three things that actually came to mind, and as you were speaking, a number of these things even popped up in your presentation. So one, I would generally encourage people to use advice. And this is not necessarily a plug for anybody, but the amount of time that we spent at the DFSA trying to make the forms easy and friendly, and everyone should be able to complete this. End of the day, it has its limits. If you're not accustomed to being regulated in particular, and where a lot of fintechs are coming from, it's best to get somebody as a translator, so to speak, that can translate from business to regulation and the way you need to go. Second piece of advice is don't rush. If you're in a hurry, that's going to make the regulator slow down. Those forces work against each other. The more pressure and time constraint you try to put on the regulator, the slower they will go in general, because there's something they're worried about why you're in a hurry. And you could be in a hurry. That's not necessarily criticism of the industry, but I can tell you that the forces oppose each other. And the last thing is just to engage. No one's trying to trick anybody in this game. We've all seen a lot of stories. And so the DFSA in particular, we worked very hard at hiring the right people so that they could engage with you and talk to you about the issues you have, talk to you about the journey that you're about to start. And so engage with the regulator early and often. That's it.
Thank you, Bryan. Mo, you want to go?
Sure, I can add to that. I was going to say, some of the stuff that you said at the beginning of this call was like so valuable. Had like we known that 2 years ago when we started this company, I think it would have saved us a lot of painful nights. Look, so I just think from our perspective, being a fintech, or a startup or scale up on this call. I think that my kind of key learning was that you really have to understand the regulatory landscape. Fintech or virtual assets is not, the same situation that it was back in 2015, 2016. Now there's a lot of supervision, there's a lot of governance, and it's really important to be compliant. So what we did and the way that we started to work on Fuse was that we had very early engagement with every single regulator across every single market. We basically now operate across the Middle East, Africa, and Turkey. We have 8 different regulatory licenses now, and there's a lot of engagement that goes on. There's a lot of understanding and research that also goes on. I think as Bryan was just saying, having a vendor or a partner or a consulting firm kind of help to understand and guide, because every single country and every single regulator is different. While the frameworks are similar, you really have to understand the nuances of every single regulator across every single market, because having a misstep can be very costly later on. And if you think about just the regulators across Middle East, Africa, and Turkey, the regulations around digital assets, AML, KYC, KYT, I think you talked about even before, are actually different, right? They're very, very nuanced. And so if you have the right regulatory consultant, if you engage with regulators, you're proactive, you're transparent, and you really sit with the regulator, you build the relationships with them, and you really explain the use cases or the business model that you want to offer the market, it really creates that trust and makes things a lot smoother. I think the one thing also that we've seen is that also does help accelerate things slightly. Regulations is definitely a long process, and as much as us founders want to move as quickly as possible, it is a long process, and there is really no way to move it faster. But really making sure that regulators understand your company, and your business model does make things a little bit smoother.
Thank you. Thank you, Mo. Namir?
Thank you, Jehanzeb. So I totally concur with what Bryan and Mo had highlighted. And of course, you also mentioned very critical points as well. I think some of the very important things to also keep in consideration while you're building up because as a founder, I'm not gonna talk about this, is you gotta build and establish a business model which is adaptable to compliance. So a lot of times, even when I started, I would not really look at compliance that seriously, but as you progress further, compliance plays an extremely critical role when you are establishing your infrastructure. Now, for us, we had spoken to, and this requires fintech founders, and I would say in large everyone, to ensure that the partner that they're choosing really understands the business model, what Mo just closed with. Very, very critical, because you don't want to, in our experience, when we had worked with some, I would say, advisors as well, we would get advice that would limit our approach, whereas some of our existing, advice that we are taking is where there is possibility creation when it comes to our business models. This is a very critical piece. Second, what we have seen is from when I wear the hat of the MENA Fintech Association, many companies that are looking to expand into the market over here, they come with a mindset which has been a typical mindset that what has worked in Europe or what has worked in the Far East will work off the bat in the Middle East. No, when you're looking at the Middle East, it is one large unit that you're looking at, which has different clusters, which includes UAE, that includes Saudi, that includes Egypt, Bahrain, and every one of them has a different set of regulations. So it's very important to identify your markets, and then the regimes that you will probably fall under. That's critical to see. And with that, the last piece I would actually highlight would be understanding the licensing part earlier on. We as a company were advised for some various licenses which were not quite relevant to us, which requires, again, for us to we had to basically have the right advisors. Again, I come back to the same point, to ensure that we are guided towards the right licenses that we require. Sometimes the licenses were not really required at this, instantly. But when you look at, as an entrepreneur, when you're looking at your business in the future, you need to ensure that you look ahead. So what license you may require, maybe that license is quite affordable right now, which you can acquire, versus what it's, maybe the cost of the license increases significantly moving further. So as a founder as well, I would say you need to look ahead where your business will be in the next 24 months as well.
Thank you, Namir. And then I would encourage the participants also to please do ask questions. The whole idea is for you to ask your questions, and the panelists will try to answer them for your benefit. So you get some free, I won't say advice, you'll get some free pointers on this. The other question I want to ask you, I think one of the key challenges obviously everybody's facing, although this has been commoditized quite a bit, is how do you address the KYC, know your customer, know your business challenge for fast-growing firms? All right, particularly when the process is not fully automated. And how does and then, for example, when basically you can have a digital verification tool, and I've built something, or I'm using somebody's system where as a retail customer, I upload my ID, I do my liveness test and all this stuff, right? Or as a business, I provide my documentation. Now, what happens at the back end, and how do you manage have you seen benefits of fully automating the process? Have you seen half automation at the front end because you want to make the consumer journey easier, and then manual process at the back end? What would be, I'll start with Mo here first, and Namir, and then Bryan, I'll come to you from a regulatory point of view. What would you say that people need to think about when they are, because getting customers through the door is very, very important, how you can get them and how you can make their life easy. So in the context of KYC, KYB, what you have seen that works best for different types of firms, and what would be the pitfalls that you say, okay, people should avoid?
I'll just
go for it,
just add this point over here, and then I would let more, since that's the Web3 element comes into play, then it gets more exciting. From our experience, KYC, KYB was not really required in our business, because we were piggybacking on the rails of our partners. If I was to talk about what we're doing in carbon markets, but then we had partnered with different players who were providing it. Why was this required? Reason being, because when we are dealing with a financial institution, a larger financial institution, which is regulated, right? We have to give them the sense of security that the partners that we are working with are also, we're not just basically relying on the KYC and the KYB and the KYP that they're doing on their platforms. Although we are not required to do this on our platform, we still do it. And for us, that helped us winning a lot of business. Yes, it was a lot of effort, but that really helped us. Second is going to be understanding, again, from now, I'm going to wear the association hat. We've had multiple exchanges that have been reaching out to us where they're not happy with the onboarding process of certain players. Now, that basically hinders your onboarding process of your customers, which also hinders your growth, because then you are at this, at this point where there's a war between compliance and the sales team, who are saying, hey, listen, we're trying to hit our targets and compliance is holding us back. Whereas compliance, as for them, they're reliant on the partner that is doing the KYC and the KYB of the businesses or the individuals, the onboarding. So that is why it plays an extremely critical role, not just that you have a solid platform that is providing you with top-notch KYB, KYC solutions, but also adaptive and quick and fast.
Thank you, Namir. Some excellent points. More over to you.
Yeah, I think Namir actually said the same thing that I was planning to say, right? So I think there's three simple things to think about. So number one is that you have to find the right platform. So you look at the different markets that you want to work in. You have to look at these tools. First, you have to understand the regulatory frameworks and the regulatory requirements. One of the challenges that we had is that we are actually a B2B provider. And then we actually we're regulated by AVARA, but then we have customers in DFSA, FSRA, CB, UAE, 𝗬𝗏, and every single regulator, even though they're kind of under the federal law, there is always slight nuances. So making sure that we understand from a gap analysis perspective, what are the different KYC elements or data points that we have to capture. That was super important. And then finding the right tool that can basically cater to us and our business and our needs here locally, but also across the broader Middle East, Africa, and Turkey, and really allowing us to do both KYC and KYB. And there's a lot of tools out there, but really working with a platform or a vendor who has done it before and who can really also have a consultative conversation with you and understand your needs as a business. That's number one. Number two is that there should be absolutely no shortcuts when it comes to compliance and KYC. Customers are going to get upset. Customers will get angry. They'll get frustrated. But if you onboard the wrong person because you want to take a call, and that can literally just destroy your business, right? So you have to be super prudent. You do have to follow the rules. And I think third thing is that the best way to manage this is to be upfront with your customers. So there may be a face scan required, a passport that may have to be scanned. You might have to move your heads in very funny directions. But this is the process, and this is how long it'll take. For KYC of a retail customer, relatively easy and super fast. KYB can take a lot longer. We've had cases that take 1 day, and we have some that take 3 months, because you have to find out who's the ultimate owner of the company, and that does take time. You sometimes have to get documents or passports certified. There's additional CDD and EDD that has to be done. So really taking your time, doing it properly, but making sure that your customers know that this is the process. And as long as your product or service is good enough, customers are willing to kind of go through that process to get to a state where they're basically live on your platform or using your product or service.
Okay, Mo, so would you also say the flexibility of the platform would be important? Before I come to Bryan, from a regulatory point of view, how flexible the platform is and their ability to give you build different sort of onboarding journeys for different types of customers?
Yeah, 100%, right? Because like I was saying, because we operate in multiple markets, and there's actually very few companies today who operate in a single market. Every market in MENA is quite small, so most of them now have a regional view, number one. And number two is because we do KYC and KYB, and we serve so many markets, having a platform that is both flexible, but also has the intelligence and the brains to sit down with you and basically help to develop these flows is super, super critical for us.
Okay, perfect. Thank you. And Bryan, over to you. So what will be, putting your regulator's hat on, how would you look at this particular angle?
So the easiest way to answer that question is look what Mo just said, because that was some great advice for a lot of people there. I'll build a little bit on what Namir and Mo have said briefly, but the biggest view and the biggest mistake I think that firms have made in my experience is viewing compliance as an extra function, something that's required and not necessary. And if you have that view, you're going to be in trouble eventually. I can almost guarantee you. So compliance should be part of the business. And I'm not saying they're part of the sales function, but compliance is part of the business. The business people, the sales people, need to understand what compliance is all about and the risks of onboarding the wrong customer from the beginning, so that you can eliminate a lot of this friction. You'll never eliminate all of the friction because there should be some healthy tension. Your salespeople are pushing as hard as they can, and your compliance people have a duty to protect the institution. So there will be tension. We can't avoid that, and some of that is healthy. The second thing on automation, I think, versus a manual function for compliance is that manual compliance, and if you want to talk the complexity of sanctions and the complexity of rule books in general and on onboarding a client in a business, the manual process is the exception to the rule. So always think of manual processes as a bridge to automation. You will not succeed in a business if you're manual forever. And the sooner you realize that you have to map that journey, as you said, Jehanzeb, map the journey to automation from an initial manual process, the better. It's not either or. Manual is a step toward automation.
Thank you, Bryan. I think I want to add here also from our experience, what generally has happened is that most firms, and this is what Mo alluded to as well, do not educate their customers. One of the things that I would tell you is that if you can put on your website a small video on what the customer journey, onboarding journey would look like, even if people don't do that, or share it with them, depending on what type of business you are, it does help. Or create some sort of a hook where people can see how long it will take, because then you're managing expectations and people don't get frustrated. Typically, frustration happens when you expect the process to get completed in a minute and it takes 5, or in a day and it takes a month. So that's where the hesitation is. I think I'll take a couple of more questions here, and then we have a number of questions from the panelists. So let me come to, I think, let me see here. Okay, so I think that the question I want to ask is, what recurring problem you have observed between regulators and fintechs, and how can that be avoided, right? The same thing that happens over and over again that you guys have seen. Bryan, maybe you go first on this one.
So just the journey easier is what you're saying, yeah? That I was reading some of the questions. There are some very good questions. But the biggest piece of advice I would have there is language. From the very beginning, and some of the conversations you have particularly in the crypto world, it's like, where have I been? I didn't know any of the words that just came out of your mouth. So think about both sides of the table, and using the latest, coolest words may not be the best for your application. Sometimes that you have to think of some basic risk. And again, if the regulator doesn't understand what you just said, then your application is on the slow lane for sure.
Thank you, Bryan. Mo? Recurring problem that you've seen across your 8 locations.
Yeah, look, I think honestly, so I have a bit of a different view, right? So my view, having been in this space for a long time and having been in the region since 2008, is that I think we were a little bit late to the game when it came to regulations on fintech and payments, and now we have robust regulations across all of the key markets. And in virtual assets, I think we actually did the opposite, where UE actually jumped ahead of the rest of the globe and released regulations that were quite robust as early as like 2018 and 2019. So I don't really see that many reoccurring problems. I think that the frameworks are clear. The regulators are quite supportive. I think this is one of the few regions where you can go into a regulator and you can have a conversation with them, sit across the table and say, look, your framework does this, I want to do this, which is slightly different. And they're very open to having those, conversations, which is really cool. I think probably the challenge is that if you look at more virtual assets and crypto, because the industry is evolving so quickly, I see that regulators who are very rigid have a hard time keeping up. You have DeFi and staking and all these brand new things that keep on coming up. Tokenization, what assets can you tokenize? Can you do a crypto payment or not? There's all these conversations that we're having across so many different regulators, and if the actual frameworks are very rigid, then it's very hard for them to kind of keep up. Versus some of the frameworks that we've seen are ones that are basically more flexible, and they're very much guidelines, and those are the ones that have a lot more space for a bit of maneuvering, right? So I just think like the world is moving so fast, and like digital finance and fintech and virtual assets is just evolving so quickly that there's a need at the regulator side to be able to keep up with the pace of change in this space.
Okay, thank you, Namir.
I think, as Mo mentioned, the regulators in this part of the world are the most, I would say, cooperative. The most easiest, in my opinion, as well, to have a conversation with the regulators in this region, because the objective of the regulators is not just to stop you, but to enable you. So that's a fundamental difference of mindset that you would find in this region versus what you would find in other parts of the world. And the other, I would say, thing that I've seen with fintechs, they would be like, oh, if you reach out to the regulator, then we would be, it would be a no for us. Whereas if you reach out to the regulator with the right approach, that, okay, we would like to get your guidance on how we can make this a lot more refined or better in whatever business model that you're operating, they will work with you on that. So yes, that's my thought towards this. And this is basically, Jehanzeb, from 2018, when we started the association as well, it was established in partnership with a regulator, right? So that tells you that the intention since 2018 was to bridge the gap between the entrepreneurs, the innovators, with the policymakers and the regulators. So yes.
Right. Thank you, Namir. I think I'll add a couple of points here, right? So recurring problems that I have seen, and it does sort of come back to haunt a number of fintechs, is that when you're setting it up, you sort of take your policies and procedures quite lightly. You say, okay, well, the regulator wants it. I'm just going to give them the basic stuff, and that'll be the end of that, and then they'll be happy, and then we'll just throw those documents in a cabinet somewhere, and we'll go our merry way and do our business. In the crypto space, that does not work, especially if you're properly regulated. Your procedures particularly need to be robust, right? If you haven't thought about those and somebody has sat down and gone across, okay, well, these are the 55 steps we have to go through, and how do we do them, and where does it comply? You are asking for trouble for sure. In sort of traditional finance, I would say traditional fintech, that is lesser of a challenge, but definitely is a challenge. And I think the key point that I want to leave with everybody here, and I'm sure Bryan would comment on this, is if you have no compliance issues, there's a problem. That means the way the regulator will look at it in our experience is either you are not telling the truth, or your system and controls don't work. And neither of those two outcomes actually are good for you, right? So having a healthy sort of breach register, obviously, if you have the same breach 55 times, that's a big issue. But if you are having issues, no regulator will come in and unless and until obviously it's a significant concern, which is blatant and obvious, that's a different matter. But if it's operational breaches and everything else that you are having, it shows that your system is working, you're identifying problems, and you're solving problems. As long as that's the case, then that's perfectly fine. But I've had a number of CEOs talk to me and saying, I don't want to see a single breach, never want to see a single problem. And we always tell them that that is not the correct way, because if you control everything, even then there will be issues. So you have to be clear on and prioritize your processes so the right type of information comes to you and you can make the right decisions. I think it's time for us to go to some of the questions which are quite interesting. I think the first question I want to go to is, would you consider crypto to be a legal tender in the UAE? Interesting question. Bryan, do you want to take this one first?
Well, it really doesn't matter what any of us consider. It's not. You can go straight to the central bank and get a pretty clear yes, no on that one. So no, it's not. Okay,
wonderful. I think another question that is there is it's talking about the rapid advancements in AI and blockchain. And compliance frameworks are struggling to keep pace with tech evolution. How can regulators and businesses collaborate to ensure compliance remains agile without stifling innovation, especially in the MENA region? So all this AI stuff that's happening, right? So what will be your view? Maybe Mo, you want to start here, and I'll come from Namir and then to Bryan.
Yeah. So what's the exact question?
The question is the rapid advancements in AI
Yeah.
and blockchain.
Yeah.
Because of that, compliance frameworks are struggling to keep pace with the technology, right? How do you maintain compliance if you're using a lot of tech, particularly AI or generative AI in that regard, right? How can the industry and the regulators work together to
Okay.
sort of come up with a framework that doesn't stop innovation?
Yeah, I mean, look, this is a bit about what I was talking about earlier, where the pace at which technology is changing, whether it's blockchain or artificial intelligence or crypto or many of the new things coming up these days. Regulators are facing a challenge, and it's not just here. It's globally. If you look at what's happening in the US, where they find that the regulations around artificial intelligence are actually too tight, and now they want to scale them back a little bit. I don't think that there's ever a right answer. I think the best way to go about this is to kind of, you as a firm, if we take it from that perspective first, you really have to have a clear line of sight between like what is right and what is wrong, and it's always that gray area that's really going to get you in trouble. We believe that using tools only isn't always the best approach. I think it has to be a mix between tech and manual. That's one. There's always 70-80% of your cases or situations that are quite easily handled by tech. There's another 20 to 30% where you do have to have somebody who looks at, for example, suspicious transactions, KYC, all that kind of stuff. I don't think that relying only on tech is ever going to work, right? There is stuff that you really have to have a human, experienced person who looks at it, and then from sort of the regulations and from the framework side, as you said earlier, regulators here are very collaborative. They're very open to having these discussions. I think that the one thing also that you've seen that we haven't talked about much is that all of the regions, central banks, and regulators are now launching sandboxes, which are really cool ways for you as a startup or as a firm to go into the sandbox, test, and share some of your findings and data, helping the regulator develop a framework and then take it forward, right? So it's a nice way to still operate a business within some sort of regulated boundaries, and then help them together collaboratively evolve the framework forward.
And
Thank
I
you,
think
Mo.
over
That
there
goes
we
into
have
the
the
second question. Sorry, but you go for it.
just saying, adding to Mo's point, for that being DFSA, we have the innovation testing license. We have the in ADGM we have the DigiLab, which is one of these are like the two important things to know if you would like to start testing something.
Yeah, and the same in the Saudi as well. CMA has a fintech permit, and SAMA also has a reg lab, and others as well.
Exactly.
I think the second question I was going to ask you, you've already answered in terms of complexity of the business that is not currently covered by the regulation. And I think everybody has agreed on this, that in the region particularly, the regulators are quite open, or most of the regulators are quite open in having a conversation and working with you to develop a framework that will help them, because they also realize in the conversation that we have had is that if they say no, it will happen anyways. People will do it and then come and ask them the question. So it is better for them to involve the innovators so they can put the right frameworks around it. And that's why VARA actually was established to cover virtual assets. Very obvious attempt to regulate the crypto industry properly. And similar things are happening all across, right? This is not the same approach, and some of the European regulators, you cannot go to them and have an open discussion, right? That door is not open for you. We've had sort of first-hand experience in that regard. So it's very, very important that you take advantage of this. And then to the earlier discussion, which is if you're open with the regulators and explain what you're trying to accomplish and build confidence, that you are trying to build a legitimate business that's going to serve customers and create value, then the regulator will definitely listen to you. If the intention is that we just want to make money as quickly as possible, if you remember the 2017, the initial coin offering fiasco that happened, That kind of stuff obviously, doesn't sit well with the regulator. I think we have 4 minutes left, so maybe one last questions here. I think I like this one. How crucial is UX strategist partner in shaping the KYC experience of your fintech product before presenting it to regulators? UX or UI, basically, how important is, I think this is for Namir and Mo, and then definitely Bryan from a regulator point of view also. Namir, you want to take this one first? UX, UI for a KYC process.
I think that's critical, right? So UI, by the end of the day, UI, UX plays, I would just like to connect the dots. Like when it's the same user who is using the same apps that we're using every single day, be that from ride-hailing platforms to your booking platforms. So in general, be that a compliance person is no different, or someone who's basically applying for a certain, I would say account, or the entire process needs to be, from the onboarding side, needs to be as simple and easy as you would find on other platforms. So you always need to compare the benchmark against those platforms that may not be from your industry either. So for me, I personally feel that's critical for us, because by the end of the day, that affects your customer's patience as well, because today's customer has become a lot more, I would say, they get distracted very quickly. The attention span is really short. So this is an extremely critical one, is all I would say.
Mo?
Yeah, I was just checking on ChatGPT, and it says that if there's an app or if there's a financial services related product that has a bad KYC flow, the drop-off rate can be high as 35%. So huge, right? So you spend so much time in terms of acquiring the customer, getting them to go on board, and then they drop off because your KYC process is bad. I think really like the message that I give my teams, and the message that that I like to share broadly, is that like today's customer is basically comparing your app to everything else on your phone. Can't see my phone because of the background, but they want their banking app, they want their fintech app to be the same experience as something as easy as Instagram and Snapchat and that kind of stuff, right? So super intuitive, super easy to use, not have multiple clicks, and just make it as seamless as possible. And this is what customers expect. And now the attention span is so small that if you don't give them that experience, then they're just going to drop off. So it's very critical.
Thank you, Mo. Bryan? From a
Yeah, so
regulator's point of view, if you see an ugly UI, UX versus a good one, what would be your reaction?
You chose the order very well on this one, because as a regulator, I don't think I ever really cared what the UX, UI experience was necessarily. That's a business issue, so the regulator is interested in the outcome. And if the UX gets you a better outcome, that's fantastic. So right. I would leave it at that.
Okay, I think I have a comment on this, and maybe a bit controversial. I think one of the biggest challenges that the virtual asset businesses have been facing, in my humble opinion, is complicated UI and UX for people. So when you go to a lot of platforms, although sometimes it's very easy, but the moment you come off the standard basic user journey, it becomes very complicated to do things that are not simple. So and that has, in my opinion, sort of stifled adoption of the virtual assets quite a bit. But with that, I want to actually conclude the webinar. I want to thank Mo, Bryan, and Namir for your time and for your insights. Thank you very much for the useful comments. I hope the participants really enjoyed the discussion. Hopefully it was useful for you. We tried to answer some questions, and we wish you a very good evening. And again, thank you very much for taking the time and joining us. Good evening, everybody. Thank you.
Thank you for having us.
Thank you all.
Bye-bye.
Thank you. Bye-bye.